Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing from IZEA worldwide, and let me tell you, it involves stock buybacks, which can be a bit like a company trying to give itself a hug in public, depending on whether the hug works or doesn't work. Like file of DATS 10 be a bit like a company trying to give itself a hug in public, depending on whether the hug works or doesn't work. But we are diving into a filing from IBA Discard community, linked in the description below for even deeper discussion. Estee Worldwide just filed an updated report called an 8K KTN with the Securities and Exchange Commission, or SEC. Think of the SEC as the Wall Street watchdog. This filing tells us about a new agreement they made to buy back shares of their own stock. This happened on June 16, 2025, and the report was filed a couple of days later. So what's the big deal? Basically, IZEA has teamed up with a company called Ladenburg Thalmann to repurchase its own stock. This is like saying IZEA believes its stock is undervalued, so they are buying some of it back. Ladenburg will be doing the actual buying on IZEA's behalf. The buying can't start until July 16, 2025, and it has to end by May 15, 2026, unless they run out of stock to buy or something else happens that stops the deal before then. The price they pay for the shares will depend on what the market is like at the time. The company management will decide if the price is right. They will be buying the shares either on the open market like anyone else, or in private deals. IZEA is using something called a safe harbor within trading rules to do this. Think of a safe harbor like a protected zone where companies can repurchase stock without getting into trouble with the SEC, as long as they follow certain rules. They're planning to buy back up to $8.6 million worth of their stock, which is the rest of the money they had set aside from a previous announcement about buying back shares. Finally, there are some exhibits. These are extra documents that give more details. Exhibit 99.1, for example, is about the instructions for the stock repurchase program. Exhibit UND4 is a technical file that helps computers read the report. It's like a digital summary for machines. Now, before we give our take, let's recap. IZEA has made an agreement to buy their own shares. They will do this through Ladenburg, following certain trading rules, using money they had already planned to use. Looking at this agreement, IZEA seems to think its stock is a good investment, maybe even better than other investments they could make with that money. Buying back shares can increase the value of the remaining shares, which is good for investors. However, it also means they are spending cash that could be used for other things like growing the business or paying off debt. A repurchase program in itself doesn't tell you how the actual business works or if the business is healthy. It's just a financial maneuver. A risk could be whether IZEA is using its money wisely. If the company's stock price doesn't go up after the buyback, it might look like they wasted the money. Another risk could be how well Ladenburg executes the buyback. If they buy shares at too high a price, it could cost IZEA more money than it should. Overall, this move shows that IZEA is confident in its future, but it comes with some risks. It's something to keep an eye on to see if it pays off in the long run. Alright, that's our breakdown of this filing from IZEA. What do you think about buyback announcements and their implications for a company's future? Drop your thoughts in the comments. If you found this analysis helpful, hitting the like button helps a lot, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, and see you next time.